Hello and welcome to another update video about MATIC. Yeah, on the MATIC chart, we continue to see a little bit further upside today. It's quite a friendly day in crypto, nothing crazy though. But the idea was and still is that MATIC could have started here this B wave to the upside around the 20th of March, which is obviously unfolding as an ABC structure, right? So the idea is that this was maybe an A, this was a B wave pullback and a C wave to the upside then still to come. Might be unfolding already, but as I said in the last video, there are two conditions. So first of all, that B wave low needs to hold. So I don't want the price to break below that 95.1 cent level. That really needs to hold because then, well, in that case, either, this A might still be unfolding, but it will look very strange. So ideally the B has started. Well, it could be that that wave B of B is still unfolding. I mean, that's possible as long as we are holding that sort of 20th of March low, okay? So I would prefer that this C wave has now started, wave C in B. And I have added to the chart earlier today, already communicated it to our gold members on Discord. The C wave projection, okay, that's sort of a target area. And it points towards $1.06 and $1.13 or 1.138. So it's just an additional, it's not super reliable, but it's probably the best we've got in a corrective wave. And oftentimes a C wave has the same length as the A wave. To be honest, that would still leave us with an extremely shallow B wave if it really only gets to that level. So I would prefer if it stretches a little bit higher, possibly to $1.09. There's a bit of Fibonacci confluence there. That's the 1.236 extension. Basically that the wave C has the 123.6% length of wave A. Very common target as well. Or the 138%, which is at $1.10, $1.11. So anyway, there's an area which seems to have partial overlap with the standard resistance area for a wave B. So I'm watching if the price can get there. However, it needs to get above this small resistance area here. These previous swing highs that formed on Wednesday and Friday around $1.02. So that level needs to break, and then we can look to or watch for the price to get into this target area. There's also structural resistance around the $1.10 level. So yeah, I mean, there are some levels that sort of have partial overlap with these areas. So I think it's relevant and would prefer that the price goes higher. It looks a bit bear flaggish at the moment, I have to say. So obviously we broke above this trend line. I can take that out. We don't need that anymore. Always try to keep the chart clean. And I mean, looking at this, you know, it looks a bit bear flag like. I'm not sure. We will see, you know, sort of an ascending wedge type thing. Let's see. I'm not telling you it will have to go there in a straight line, because B waves tend to morph, tend to change. Well, as I said, what could happen is that, for example, wave B in B, and I know that's getting very complex, is still unfolding. As long as we're holding this week's low, you know, it's possible that this is just the A, a B, and a C in B, of B, okay? And then we start, you know, it's just discussing those microstructures is sometimes confusing because they can change a lot. But I think at the moment, I mean, for the last few days, MATIC has been extremely stable in terms of also the wave count, but that was just because nothing happened really in the crypto world. So I would prefer this wedge pattern actually to break to the upside. I know that's not so common, but it tends to happen in crypto quite a lot in bullish markets. So, you know, I wouldn't rule that out. But a break to the downside would make me first explore if the B wave is still unfolding. So wave B of B with support possibly around 93 cents then. Yeah. And then, I mean, if the C wave to the upside has started, then it might turn into an ending diagonal. So we might be dealing with this 1, 2, you know, 3, 4, 5. And that can take us, you know, to the 1.236 extension. It would look good, you know, that's at least an idea. That also gives us, on the micro level here, another invalidation point, which is this wave 2 low. Yeah, so this microstructure is valid as long as this wave 2 low is holding. That's at 97.6 cents. Now, that's nothing highly reliable that I would trade or something, you know, it's just tracking the waves. And I think a decent setup would be, once we get the C wave to the downside completed, deep in support, maybe for accumulation again, to accumulate to trade the third wave higher. And I said before, if the price breaks below 78.5 cents, I'm not gonna turn bearish on this chart, but the immediate upside setup will get much more challenged. And at some point I will have to say, because we had the chart had so many opportunities to really, I mean, properly break out, okay? And it didn't do that. I mean, yeah, it's going higher, absolutely, and it's still a bullish structure, but it would, you know, if we invalidate a 1-2 setup and then another 1-2 setup, at some point you start to think, okay, you know, scale back expectations, and then let just the market show itself again that it can actually deliver. But for now, you know, it's a bullish chart. I'm just watching now for this B wave to play out, and then essentially, ideally, we get a nice and healthy A, B, C structure and can go from there. And the thing is, I mean, the wave 2 could have bottomed here, right? That's possible. It's just that this is not third wave style to the upside. So unless the market gives me a decent 5-wave move up from these lows this week, I assume that we're still in wave 2, just in a B wave of wave 2, a corrective rally, which could technically even overshoot if it goes very aggressively. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.